There is a huge boom of fintechs now coming in. They have this ability to target customers and offer credit for them. So, you think there's a competitive threat here for the mid-sized bank?
Call it like, say, you are getting sandwiched between larger banks and the smaller bank. You can also call we have found out a niche in between.
There's also a profound challenge that the banking industry is facing. One is the plummeting, deposit rates here.
People forget when you put money in the mutual fund or people buy equity, then also the money comes to the banking sector only. Ultimately, banking sector only keeps the money.
You're possibly the best to answer this question. As somebody who has spent about 20 years in City Union Bank, and your father was also, served as the chairman of the City Union Bank there. What kind of next-gen leadership is City Union Bank trying to build? Hello and welcome. I'm Vijay Srinivas, and this is C-Suite Conversations. In this edition, we're joined by City Union Bank's MD and CEO, Mr. N. Kamakodi. Rasiana Bank, Asiana Bank, as it proudly calls, City Union Bank is celebrating its 120 years, marking the milestone with expansion in newer geographies. Its 900th branch in Agra. From trends of foreign capital flowing into Indian banks to plummeting deposit rates, to City Union Bank always being profitable since its inception, we've got a lot of questions to ask. Thank you very much indeed for your time, sir. Let me begin with you. 2025 has already seen nearly $15 billion pumped into India's banking and financial sector by marquee global investors, including Blackstone to Emirates NBD to SMBC. So, given the scale and regulatory tailwinds, what's your vantage point? How do you see this? You see this as a wave of beginning of the start of a structural reset for Indian banks, or is it going to be a very temporary move to see just short-term capital chasing yield?
See, if you look into there have been multiple ways of looking into it, as we have been seeing this. Mm-hmm. Say you have the investors, the institutions who go for getting yield. You also have institutions who have got strategic requirement to come into the India, like what you said, the what happened recently, where the investment is on strategic reason for looking into. You had the case of DBS Bank taking over the Lakshmi Vilas Bank in the past. Like that, you have a series of such thing. The particularly there had been lot of regulatory the view that having too many foreign institutions in the country may not be good for the development of the country. But now the Indian banks have met with the entire foreign banks also. So the required confidence and the way the way the Indian banks look into the competition has also got changed. The Indian banks are far more looking to be more efficient even compared to their global counterparts. So in that way, as you had been seeing since the liberalization, all the regulatory changes are always getting more towards the reforms and relaxation. You are also getting the same feeling in the insurance also. People are talking about 100% FDI in the banking industry and all. But banking at the same time, it has got its own, the requirement like your financial inclusion, rural reach, priority sector. So there had always been the questions asked when you have more and more foreign institutions into the domestic landscape, how these sort of requirements are going to be taken care and all. But I think they also have some sort of branch licensing vis-a-vis how these the priorities of the country and all are taken care. But ultimately, the arrival of foreign capital is good to greater extent, and I think there are sufficient checks and balances to take care of how much capital can be allowed, to what extent the foreign institutions can be given a free hand. And you had, in fact, sometimes when even the domestic banks are having higher foreign ownership, but which came from multiple organizations together and all. Mm-hmm. So the always these changes are taken in a measured way, in a step-by-step manner, and it is going to be beneficial for the country as a whole. There is no second opinion about it.
Okay, much of these stake purchases driven by there's an untapped potential in credit demand, particularly in the tier 2, tier 3 cities and all that. So many mid-sized banks, therefore, are now muscled with, empowered with fresh foreign capital. So, and that is sort of reshaping the competitive intensity in the, BFSI space. City Union Bank, however, has been very disciplined and, in a way conservative in terms of its lending approach. Perhaps is one of the reasons why it's still profitable even today. But in an environment where peers are chasing aggressive growth, what does growth actually mean for City Union Bank?
See, the basically, if you had what you call view for a time period of maybe a decade or few decades or maybe a generation, how things had gone. The banking sector, perhaps when the liberalization actually started, you had multiple years. In fact, about like say 15 years back, you had a period of higher inflation also. There are multiple economic cycles which are going through that today.
That's right.
You had a period when the like say the for if you look into per se, the growth rate of probably a developed economy perhaps will be the growth rate of the banking system and the like say the real economic growth rate used to be by and large same. But it all depends upon it could probably be used as a proxy to measure to what extent the economy is developed. In fact, we had a higher contribution from the what you call the economy was not like say you had more and more portion of the economy was not formalized. You had a lot of informal economy in the past. More and more the formalization is happening, particularly after the arrival of your like say GST and also the demonetization and all. Like you are able to see a larger portion of the economy is getting into your you are able to see them into the formalization. So in that way, in fact, we had a period when the growth rate of our banking system was almost 3 times the growth rate of the real economy. Now it is now getting moderated to about maybe about 2 times the growth rate of the economy, which means that we are getting into the next plane in terms of the formalization of the economy and the level with which the economy is developed. See, basically like for example, an economy gets transformed into say a middle income economy when the per capita income crosses about $10,000 PPP, and we had gone almost we have come closer to the 50% of that, and lot of growth has happened in the last maybe a decade or so. So looking into all these things together, there is like growth rate of, for example, our currently the current year the growth rate of the Indian banking system is expected to be about 12 to 13% or something is what is being now expected over the period of in the second half also to complete the year with about whatever. So we had what you call focus maybe for not less than 2 decades. So to grow at about maybe 2 to 3% over and above the growth rate of the industry. We had not been very aggressive. At the same time, our maybe because of the growth, like say the size of the bank, or maybe like say because of the focus and whatever discipline with which we had progressed, we typically keep our target growth rate as about 2 to 3% over and above the growth rate of the industry. Maybe if you look into the last 25 years, at least for the 20 years, we have fulfilled this, achieved this target. So that still remains as our long-term average target, which we keep for the growth of our bank, which ensures that we are growing. At the same time, sufficient guardrails are there for the quality of growth. And you also need to take into account the multiple paces which you see in the economic and interest rate growth cycle. So now you are entering the reducing interest rate cycle. You are also hearing that there could be 1 or 2 more hikes before the end of the current financial year and all. You are hearing multiple things over. Like you are very much into the decreasing interest rate scenario, and it has not reached the bottom trough yet. which means that, like say, the expectation is that the general economic growth rate has to pick up, which also means that the growth rate of the banking sector should also
Pick up, yeah.
pick up. So in that period, you will also have the contraction in the margin where the yields reduces, and the cost to get repriced, it takes a longer time to see your term deposits getting repriced and all, and some amount of contraction will be there in that, and we are going through that. The entire banking sector is going through that pace at this point of time.
Okay, with India, entering into a new phase of credit expansion, where do you see the largest growth opportunity for CUB in the next 5 to 7 years? I'm talking about the vertical that CUB should be betting on.
See, if you look into the vision of our founding fathers in 1904, they were very clear that we need a banking institution to channelize the savings of the Indians. And also we have to lend at affordable rate to domestic agriculturists and businessmen. And we had our focus particularly on the micro, small, medium enterprises,
That's right, yeah.
agriculture, and the wholesale and retail trading as our focus area. Almost maybe about 2/3 to 3/4 of
That's
our
40% of your loan exposure.
exactly.
Yeah.
It's 2/3 of our overall loan book. It is about 65 to 70% of our loan book. We had been focusing on these sectors of micro, small, medium, and enterprises, agriculture, and commercial trading of both retail and wholesale trade. Traditionally, we had not lent so much in the consumption front, be it a housing loan, car loan, or this sort of consumption loans. Yeah. We had also always kept ourselves, focused on the creation of business assets, and our entire lending is purely focused on that. Now we are slowly trying to get into the consumption areas also, particularly the secured front, which comprises of the retail housing and retail vehicle loans and things like that, which are going to add another 1 or 2% extra growth for us. And we expect maybe in the next maybe 5 to 7 years, this segment, new segment, should be taking care of about not less than 5 to 7% of our overall loan book is what we expect, and we have started moving in that direction.
Okay, so CUB is often seen as the MSME bank, the ultimate destination for MSMEs there. What gives CUB an underwriting advantage in the MSME space that other lenders don't really have?
See, it is because of the culture. So since the right from the beginning, for 120 years, this had been our main source of our bread, and we have been doing with that, and which has got engulfed into our overall credit culture of our bank. Of course, now you have got digitalization of various data and all are helping every bank to get into this segment. But one important item whenever you are dealing with an MSME sector is that here the requirements of the customers, you cannot put everything in a product or put everything in a single boundary or with definitions. So the requirements change, the behavior changes, and you need a structure to understand this and offer your product accordingly. Since we had done this over multiple generation, which is helping us to ensure that we are understanding the requirement of the customers and tuning our products accordingly. At the same time, we are also ensuring that we also embrace the new technological changes that are coming over, and we the mix both the trust tradition and also the technology in a proper format, so that the micro, small, medium enterprises are feeling at home when they deal with us.
So you have on one side you've got the heavyweights like HDFC and ICICI Bank. On the lower rung you have got small finance banks now emerging, and City Union Bank somewhere fits in the middle. It's kind of sandwiched between two sides, right? And there are lots of other players as well. And there is a huge boom of fintechs now coming in. They have this ability to target customers and offer credit for them. So you think there's a competitive threat here for the mid-sized banks because of the fintechs and all that?
See, I'm actually facing this question for last not less than 20 years. And that was the time when the fintechs were not there. you can call it like, say, you are getting sandwiched between larger banks and the smaller bank. You can also call, we have found out a niche in between.
That's right. Yeah.
So the our answer for this question had always been, if you are agile, if you are efficient,
Yeah.
if you are able to add value to the customers, and also particularly in a country like India where the economy is growing at a pace, like still you have got a significant portion in unorganized and, like, say, more and more developments happening. So there is room for maybe another N players into the market, and everybody will be having their own share to thrive and add value to the market at large.
Okay. So in a world that's shifting to digital, and what do you think is the future of physical branches? Because you opened your 900th branch in Agra. So, but why open a lot of physical branches?
See, particularly for both, like, say, depositors and also for the, like, say, advanced customers, we need some physical presence. Of course, the varieties of services that were offered, say, 15, 20 years back, before the this much explosion of the technological service, is totally different from what the services which are offered today. Say, for example, if we can offer service to N customers through branches 20 years back, today perhaps we are offering N square, N cube, and it's in an not just arithmetic or geographical proportion, it is in the exponential proportion. We are able to offer efficient services to multiple customers. At the same time, depositors need to see the physical presence for their confidence. Similarly, for like, say, advanced customers, whenever you lend a loan, you need a physical presence to, like, say, for the future follow-up and recoveries. Particularly when you are giving more number of business loans, it is the responsibility of the banker to continuously ensure that the end use of funds are properly there. Whatever, like, say, loans we have given are safe. The business entity is running profitably. So the people are present in their respective physical places is something like, though, like, say, for example, earlier and all, people used to come even to withdraw money or deposit money to the branches earlier. Now the ATM help them to withdraw from anywhere.
Yeah.
So cash can be deposited. Online banking does multiple things. But particularly the borrower needs the presence of a branch manager to discuss about what are all his requirements, any opportunities if he had, any issues if he had. So you need a manager customer discussion. Maybe that frequency has come down to a greater extent, and if every branch is able to handle multiple customers. But the requirement of the physical branches have not come to zero. Earlier, for example, if customers used to go for the bank which is in the periphery of 1 or 2 kilometers, maybe today a bank will be in a position to handle customers in maybe even 10 kilometers or whatever, depending upon the requirement and nature of the business, like that. So yes, one side you are right that the requirement of the physical branches are coming down, but they are not coming down to zero. At the same time, there is a proportional decrease in the size of the branch. There is a proportional decrease in the number of people working per branch. But you cannot make it zero. You need both for depositors and advance customers. The presence of the physical branch is, the need is felt for various other requirements.
Okay. Private banks are also rapidly modernizing the core banking systems. Is City Union Bank preparing for a major haul? I know that you partnered with the Boston Consulting Group a couple of years back. Any technological changes happening within?
See, fortunately, I am coming from a generation where I have seen, like, say, branches without computers. So the lecture book banking was also available when I joined the City Union Bank in 2003. That was the period when the core banking started.
Okay.
Most of our branches at that point of time, it was basically with working in the DOS platform, what they used to call as ALPM, where distributed computers were there. Even color monitors were not there. So about 2003-04 onwards only, the migration to the core banking solution started, which was a major shift in the technological advances. So along with that, in the next few years, around 2010 to 15, you had the explosion of, like say, not only ATM, the cash deposit machine, along with that, internet banking and mobile banking in a big way, particularly after the arrival of Aadhaar, Jandan and mobile banking, where you had the smartphone era, the availability, arrival of the app. So you had the, like say, the mobile banking and all picked up in a very big way. COVID, in fact, exploded the utilization of the non-branch channel by the customers. Even many customers, particularly even the senior generation people, who thought that, like say, doing banking through computers were not safe during the pre-COVID era,
Started adopting.
they adopted the, like say, mobile banking and all post-COVID, which became the necessity at that point of time. Things got used. So we had been consistently upgrading our technology-based services. In fact, the building where we are now sitting and discussing, this is the building where our entire, like say, computer support department is working. Along with that, the further arrival of your artificial intelligence and, like say, the other machine learning and those sort of upgradations in the technology also you have started seeing. So in fact, we sought the help of BCG for using these sort of various technological advances into our credit underwriting process. The sum and substance is, say, for example, in the past, normally an underwriter used to take about not less at an average of about 4 hours to take a decision on a proposal. So in that proposal, he had to look into the balance sheet. He had to check multiple data points, like say how the turnover had increased, what is his CIBIL score, what are all the multiple ratios, and so many things. So it used to take about 4 hours for an underwriter to take a call whether a loan can be given to a particular application or not. Mm-hmm. But now, after the arrival of AI and other things, now you have got the connectivity with various databases like your CIBIL score, your the GST returns, and your access to your balance sheet, and all with the support of the customers. Bank is able to access these sort of information and collect those information, process them, and there is a clear-cut automation in the decision making to maybe at least 80-90%, and it gives a recommendation also whether the loan can be given, how much can be given, and all at a much shorter rate. And we had been, like say, undertaking those journey, like almost for the last 1.5 years, the things have stabilized there, and along with that, the utilization of artificial intelligence and machine learning to understand the pattern and all for earlier fraud reductions and other account operations and the things like that. We have been like say running along with the system to ensure that we are not left behind in the entire technological developments.
All right. So there's also a profound challenge that the banking industry is facing. One is the plummeting, deposit rates here, because Indians are moving into mutual funds and equity markets there. Where the industry's cost of run, funds rising as a result. How will City Union Bank build a stable, low-cost liability franchise, without entering an expensive sort of a rate war? And what's the differentiated strategy that you have been adopting here? You would like to bet on?
See, the talk that the Indians are shifting their entire savings to the
it's exaggerated,
equity ring. Like say, the last year, the talk was far more, like say, in a what do you call, people used to talk like that as if there is no tomorrow. And now it all cyclical. And like say there will be an equilibrium reached, like say, for these sort of like say what proportion it will go to the equity market, to what portion it will go to the mutual funds, to what extent it will go to the what do you call, banks and all. And people forget, when you put money in the mutual fund or people buy equity, then also the money comes to the banking sector only. Ultimately, banking sector only keeps the money.
Okay.
So it took some time for like say last year, like say depending upon the interest rate cycle and other things, the money creation, the overall performance of the general economy and all, there used to be ups and downs in the growth rate of the deposits and money creation per se, and it is following a path at this particular point of time. And yes, it affects the like say the availability of the low cost deposit to some extent and all. Ultimately, it will get affected in the yield front. So there is definitely some sort of like say intermediation which is happening through the banks and all. So different legs and different parts of the economy, they balance depending upon the cash flows and all, and it's not as if you are going to see like say for example, now you are in the part of the interest rate cycle where the cost of term deposits are coming down drastically. So it is it's all determined by the demand and supply, and also in which portion of the interest rate cycle the economy is going through. So you will if you look into the last 20 years, probably I am seeing in my fourth cycle now. So it's a thing which is a cyclical thing which will be happening like say in a what do you call interval which you cannot predict, which is once again as a part of the interest rate cycle and economic cycle which you are going through.
Okay, so as you've been saying, City Union Bank has been profitable since its inception. What kind of cultural attributes you think is keeping the bank stable, keeping the bank what it is today?
Basically, the culture of risk management is something which I have to say. Say, for example, if you look into the last 20 years, there are 2-3 developments I am not sure whether you had followed. Like say, as you know, the like Indian economy was liberalized in 1991 by when Narasimha Rao was the Prime Minister and
Dr. Singh was the Finance Minister.
Manmohan Singh was the Finance Minister. After that, you had up to your Y2K, there were a lot of like say changes happening in the Indian economy, and prudential norms on the NPA recognition and all started coming up. You had what is called as Narasimham Committee, Janagiraman Committee, I mean particularly the Narasimham Committee which dealt with the like say prudential running of the banks and all. I am talking about late 90s. So in that you also had the Basel committees and all are slowly each and everything coming, and you had a major like say economic growth till Y2K. After that, the Y2K bubble burst, the dot-com bubble, which created ripple effect across the economies of the various countries. So immediately after 2000s, the economy was not doing bad, which coincided with the introduction of the prudential norms. Which became pro-cyclic, and there was a huge rise in the NPA of the sector, like say as high as 45%, I mean 15% or so. There was about huge increase in the economy. I am talking about 20 years back and all. So after that, you had interest rate cycle at this point of time. So the 10-year bond yield started coming down significantly, and there was a huge appreciation in the bond book. So banks were resorting to, they booked the appreciation in the bond book and used that to make provision for the NPA and all. Suddenly that there was a reversal of the 10-year bond yield at that point of time, immediately creating lot of depreciation in the bond book, which resulted in almost half a dozen bank in the next 5-6 years, they did not see the like say light. They all got merged with some other bank. You had all old private sector bank, like say you had some of them also had some governance issues. The Bank of Rajasthan, the United Western Bank, the Sangli Bank. You had a bank by name Nedangadi Bank out of Kerala. You had multiple banks which suddenly lost their identity and got merged with the bank because they got affected because of this reversal of the bond yield. We came out of that with minimum hit because the risk management that was taught to us over by the generations of the CUBNs of the past was that here people like say when the yield was reversing, people said if you book loss, like say if the yield reverses, there will be appreciation which you will be losing. Like they were all expecting something good to happen and kept quiet. But our policies clearly told that the loss today is much more dangerous and you have to take immediate decision and not wait for something to happen. So we came out with a minimum hit. Similarly, when the 2008 global financial crisis came and multiple banks had issues with their unsecured lending and all, we did not have much unsecured lending at all as a policy of our thing. So after that, the corporate lending created a huge, consortium lending created a huge issue, particularly the infrastructure lending and all. So we were also not in that. Like say at each and every stage when a particular sector was getting extra coverage and people were running behind that, so some sense prevailed in that how much risk we have to take and how we should manage that and all. That culture helped us to ensure that like say we are not getting trapped into things which we are looking too good to believe. That's so right. I would rather say that one, God's grace. So the good time at which our founders started the bank, and after that the risk management principles what they taught us over the period of time, which is imbibed into the DNA of the bank, which has helped us to ensure that we are not getting caught off guard in most of these major shocks which happened in the banking industry.
Okay. And one last question there, sir. I think you're possibly the best to answer this question. As somebody who has spent about 20 years in City Union Bank, and your father was also, served as the chairman of the City Union Bank there. What kind of next gen leadership is City Union Bank trying to build? What skills and sort of mindsets and caliber that you're looking out for somebody at the driving seat of the bank?
See, the what is currently needed is like say there are a lot of changes which are happening in the banking system. Probably like say when I joined the bank, and when I like say I was given charge as the CEO of the CEO position of the bank way back 15 years back. Yeah. Most of the like say skills or the knowledge which I currently possess were learnt new. I have to clearly say that like say much of the appreciation whatever I have today or much of the things which I am dealing with, problems which I am dealing with today, 90% of them were not existent 15 years back. Okay. So the changes that are happening in the like say industry is like say pretty fast, and the leadership for the future should be having sufficient attitude to like say learn and unlearn so quickly to adapt to the changes also. Another major issue is the attitude. I mean, banking is a service industry where the human resources form the main assets of the bank, though they are not finding a place in the balance sheet. So it is the people who run the organization. The attitude and priorities of the next generation. Say, for example, if you take my son, so probably I cannot equate whatever relationship I had with my father. So the priorities of the next generation, and some of my friends say that if you start talking this language, it means that you have become old. But there are the attitude what is needed at this point of time, particularly to like say identify the changes that are happening around you and make yourself adapting to the changes. Today it is digital with your AI and ML. Yeah. say maybe about 10 years back, it was more into the risk management and credit processing. So, though the basic aspects of the banking will stay as such, there are a lot of changes in the peripheral aspects which are perhaps what do you call defining the core aspects of the banking. So, the next generation leadership has to be mindful of that and prepare continuously for adapting to the changes is what is required at this point of time.
Thank you very much, sir. Such a pleasure talking to you. Thank you.
My pleasure.